Wow.
Yeah.
Thank you. So the figures that we see are not just coming from, elsewhere other than work of research and team. Thank you very much, Vicky, for that. Coming back home, Paul, many people know money market. In fact, if you look at many people would call these funds money market funds because that is the most known investment by most people. And for those people who had invested last year in money markets, the rates have really gone down, and they are wondering what is happening in the economy, what is happening to my investments. So what would you tell that investor who is skeptical, who is worried, who is concerned the money market rates have gone down, and are there other better opportunities for such an investor?
Thank you, John. That's a good question. So to address these money market products, as the name suggests, these are short-term products with maturity within 1 year. And these short maturities means that these products are usually very susceptible to rate changes. When lending rate goes up, they almost reflect immediately. Likewise, when the lending rates go down, they reflect, the yields on these securities also reflect immediately. As we saw over the past 12 months I'd say from July of 2024 up to date, we've seen the yields on these money market securities trending downwards, majorly because of the downtrend in the yields of treasury bills, which are majorly form part of these money market products. And then with also the interbank rate change going down, the rate at which banks can lend money to each other. The deposit in banks, the yield of deposit in banks also go down. These deposits, as you can remember, also form part of the money market products. And also for the yields on the short-term treasury bonds with maturity of less than 1 year, as they go down as well, of course the yield on the money market as well will go down. But I think it's a general law. If you can loan me money at a lower rate, meaning I'm in a more place to pay you back, like there's some sort of security, so you should not be worried if you can afford to lend me money at a lower rate. So in as much as the rates are going down, the yields on money market products are going down, but it's a good sign. Yeah, because our inflation is in order, it's stable, our currency is currently stable against the dollar, and also we have enough foreign exchange reserves to cover us for at least 5.3 months of import cover against the required of 4 months. So yeah, in as much as these rates are going down, there should be no cause for concern. They're good, and we still expect them to go down further as the lending rates also tend downward. Yes.
So you're telling the investor there is no reason to worry?
Yes, at all. There's no reason to worry.
Thank you so much.
Yeah.
Howie, we are in the advent of information. People can easily access platforms where they can trade for themselves. There are a lot of sources. There are many sources of information that would help people make decisions on what stocks to buy, which markets to go in, and all that. Why should someone invest in AVOCAP funds, and especially the global markets and the global funds, when they can invest by themselves on their own?
Okay, so number one, again, I think what we do provide investors through the Global Equity Fund is the ease of investing in global markets. For instance, it's quite a laborious process opening an account in, say, Asia to invest in Asian stocks. A market like, you could say, Thailand or Indonesia barely have any platforms that give investors that access. And if they do have them, it's quite a stringent process opening up accounts there. So we do give you access to global markets under one roof. Number two is, again, we have a systematic process behind our decision making. It would take a lot of work for an individual to be tracking bond volatility, real yield differentials. You're talking about retail flows, whether it's your put-call ratios and all these volatility curves, skew. So there's all these things we're constantly tracking on a day-to-day basis that do allow us to provide what's called alpha. That's outperformance for our clients. So I could say we're here to lose sleep on your behalf. When Trump tweets at 3 a.m., we're ready to react and synthesize the data and know what potential outcomes we should expect. So I think it's something that allows us to provide immense value for our clients, because again, you don't want to be, stressed about this day-to-day volatility and the constant shifts, especially in a time where we have a president in America that's quite unpredictable. It pays to have professionals and a whole team. It's today we're saying 3 people, but there's more than you could say a football team managing most of these funds and the portfolios. So yeah, I'd say it's just a specialization we do provide that would be of benefit for individuals and investors who might be thinking doing it on their own is a good choice. Yeah.
Right, so you have heard that we are not sleeping on your behalf, so that when Trump tweets at 3 a.m. when we are sleeping, you can be sure there's a team that is checking on your investment and making sound decisions so that you gain on that. Thank you very much, Howie. Maybe the very last question, and maybe in a very short way answer, Victoria. Avocap has Sharia funds, and we don't have as many Sharia funds in the market. So what are we looking at, and how are we doing it differently in order to cater for those people who are looking for ethical funds to invest in?
Thank you for the question. So Avocap has 2 Sharia funds, the Avocap Mabruk Special Fund and the Avocap Sharia Global Equity Fund. For the Mabruk Fund is a multi-asset fund, which means it invests in different asset classes. It can invest in halal or Sharia compliant stocks. It can invest in Sharia compliant bonds, which we call sukuks. It can also invest in fixed deposits and call deposits which are Sharia compliant, and also even Islamic private equity in arrangements like Mshaka, which are Sharia compliant. Going to the Sharia Global Equity Fund, it's purely a stock fund which invests in halal stocks. So what we do at Avocap, we make sure we screen these investments. So we start with sector screening. That's where we make sure we pick stocks which only adhere to activities which are Sharia compliant. So we rule out businesses activities like those which involve in alcohol, pork, gambling and such. And also make sure we also rule out businesses which provide interest or riba, like the traditional banking setups. And also we also do some financial ratio screening. That's to ensure if there is any of this income coming from these non-halal or haram activities, we make sure it's less than 5%. And in case it's according to Sharia also, that less than 5% has to be given out as charity. So also to make sure we do all this screening and invest in the right thing for our ethical investors, we also have a Sharia board, which has 2 sheikhs, like Sheikh Nasir from Gulf Bank, who also guide us on even the local investments and the global investments. For our Sharia funds in the Q3, which is the quarter ending 30th of September, the local one, the Mabruk, which is denominated in Kenya shillings, and its minimum investment is 100,000 Kenya shillings. It was able to give 12.13%.
That's in 1 quarter?
In 1 quarter. So you make that, you annualize that, it will be around 48.54%.
Wow.
The global one, the Sharia global one, was able to do 6.95%, and it's a dollar fund, denominated in dollars. Minimum investment $1,000 shillings, minimum top up the same. So you analyze 6.95% to get to 27.7% around there.
Wow.
So these are quite good opportunities for our ethical investors, and it's not only for Muslims, it's for anyone looking to even diversify their portfolio. You may have these other funds and you want to
diversify them in Sharia.
You can also have those ones. And we're also in active trainings. We do webinars. We go to mosque to make the investors aware of these opportunities so that they don't say we don't have the opportunities. They're quite limited in the country and even in the global. And that's why we saw the need to have these funds to cater for the gap.
All right. Thank you very much, Victoria, and thank you very much, panelists, for that very, very informative session about the markets locally, in the African market, and in the global markets. And I'm very sure that our viewers, you have had a whole 360-degree view of the markets locally in the African market, and how it has taken us all the way to the global markets. Before my panelists exit the stage, I think there are some of our viewers who came when you had already introduced yourselves. So I want to one more time request that you introduce yourself, tell us your name and what you do at Avocap, even as we wait to get to the next set of questions.
Thank you so much again, John. My name is Paul Oko. I am the dealer and the macro research analyst.
Thank you so much, Paul.
Thank you, John. My name is Victoria Kyoko. I'm a portfolio manager.
Thank you.
My name is Howie Abonji. I'm the global markets analyst.
All right, and that brings us to the end of our first session. So, ladies and gentlemen, I want you to appreciate the panelists that we had. You can send flowers, send emojis, send everything as they exit the stage. Thank you very much. We can now exit the stage as we wait to have a session. Are you ready for the next set of questions that are going to be taken through by our executive, our co-founders? But before they come, I have something that I wanted to speak to us. Now, November, which is starting this weekend, is Men's Mental Health Awareness Month. And most of the time we see that we have the No Shave campaign. And this is basically a sensitization or a way to encourage, men in as far as their mental health is concerned. And so as a company, we decided to create an event that will bring together men so that they can unwind, they can talk. I know men probably may not, in many communities, be able to express themselves, especially when they are breaking down. So this is an opportunity for you to come and connect with the other men. We will have panel discussions, we will have experts, we will have very real conversations about, men, the things we go through, how you pick yourself. We have people who have failed and they have picked up themselves and they are going to give their stories. We have, a lot of good things to talk to us about. And so this year's Men's Men's Wellness Summit will happen on the 29th of November at the Waterfront Mall in Karen. And we have the early bird tickets ending tonight. Is it tonight or tomorrow night on the 31st of October? So the tickets are going for just 7,500 shillings per head. After that, they are going to go to 10,000. So please grab your ticket today. And if you have a man in your life, your brother, your sister, your husband, your boss, your colleague, your enemy, please make sure that you give them something to remember. And this is one of those experiences. Sometimes we say, after all those things I did for you, so this experience is one of the, after all, the things I did for you. And it is a good opportunity for you to award or give something to your men. So men, if you have not celebrated your birthday, this is a good way to celebrate your birthday. And if they already have done it, you can reward yourself with this session. And of course, we know where men meet, they cannot miss, their meat has to be there. And so there will be a lot of meat. But for those of us who also don't eat meat, there will also be a lot of good stuff. So make sure that you come so that you interact and be able to network with the other men. Go to mock.com and buy your ticket there. The early bird is ending tomorrow night. But you also have tables. We have a table of 3, a table of 5, and a table of 10. You will be able to grab your ticket there. Are we in agreement? Wanaume ahu. Ladies, please get something unique for the man in your life. And thank you very much. I think we are ready with our second session. And with us tonight is a team, the co-founders, the brains behind the numbers that we see, the flashy numbers. Monica, karibu sana, it's good to see you again. There are so many that are coming from our viewers about Avocap. That Avocap is such a young company, but we have delivered numbers. But besides delivering numbers, 6.2 billion shillings AUM in just 15 months. What are you guys doing that everyone else is not? Please give us the secret.
Thank you.
our clients, and wherever you are. As you rightfully said, 6.2, actually we are at 6.5 as at this evening.
Wow.
And we just want to say thank you for our investors trusting in us and giving us the chance to invest for them. What has made us get here this fast? First of all, it's good to know that Avocap may be a new vehicle, but we, the co-founders, have quite some experience. Combined, we have over 50 years of experience in the market, and this is various markets. Again, before Avocap really came to the limelight, we had a full 1 year crafting the products, ideating, thinking about what does a client really want. And by the time we were coming to the market, we had really seized everything that the clients were saying, and we were able to bulk the needs of clients in a number of funds. And I know our CIO will take us through the funds. And so when we came to the market, it's a product that was readily acceptable. When we say that you can invest in bonds and trade, this is most of the, it's something that bond investors understand, that you can trade bonds. But how do you trade? Because again, these markets favor quantum. So you'll find you have the idea that you would want to invest in bonds and trade in them, but then again, quantum limits you. So that's how we have been able to come to the market, understood our clients. Again, previously we have dealt with clients and we know what call them the high net worth investors, be it corporates, businesses, individuals, groups, chamas, what are they looking for? So that's how we were able to curate. So that's how we've gotten where we are. And we look to continue giving you value for your money. Avocap means value. Avo is Finnish word, meaning value. So we are here to deliver value to your capital.
Wow.
Thank you.
Thank you very much. You have already heard that this is a new vehicle, but in the hands of an experienced driver. The combination of experience and newness is the reason why we are accelerating at that speed. And thank you for that explanation, Monica. Wilson, the man behind the numbers, as you introduce yourself, would you give us a snapshot of how these funds have performed so far?
Good evening, everyone. Good morning for those in other parts of the world. It's great to have you once again in this webinar as we explore the Avocap nest of funds. We call them a nest of funds because in these nest there are golden eggs. And these golden eggs, as the CEO was explaining here, is a solution to an investor need. Is it a short-term investment goal? Is it a medium-term to a long-term investment goal? Is it a wealth preservation goal? Is it a wealth acceleration goal? So in this nest, there are golden eggs, and each of these golden eggs is a fund, and we have 10 funds. As the panel that was here was trying to explain the scope in which you operate and how each of those funds fit in that macro environment that we operate in. It's been a great performance. It's been a great almost 18 months now since our funds went live. And over that period, we have seen remarkable returns, great returns across different funds. And our funds, simply to understand them, I like categorizing them into four spheres. We have the fixed income funds. That is your money market, currently averaging around 11% per daily annualized yield. We have your multi-fund, which has done over 25% over the last 1 year, or the last 12 months trailing, 25% return. And as our macro analyst here was explaining, because of the structure of the fund and the active participation in the market, in the Nairobi Securities Exchange, I know to most of our viewers, just to give you, a color about 2-3 years ago, we were trading about 600 billion worth of bonds in the Nairobi Securities Exchange in a year. This year, up to September, we traded about 2 trillion. A great feat, and you can see the growth in the market. So how do our investors out there participate in this growth, in this active trading that's happening in the Nairobi Securities Exchange of government bonds? That's where Almaty comes in. That's where the great returns are coming in, that you're not passive, we are active in that market. To your distribution first, the GAO, 14.5% monthly income distribution. When you're looking at your beneficiaries, looking at them at very good returns. To your Eurofix, averaging about 12% on a dollar fund, fixed income dollar fund. We're actively investing in the Eurobonds and actively trading in the Eurobonds market. Then you come to the second sphere, which is now your equities fund. And in your equities fund, these, as I said it in the last webinar, these are your accelerators. And these funds, cloud and all those that are helping this ecosystem that they're helping to create. And that's how you get exposure to them through our Matthias Strategy Fund. From your precious metals, we have been seeing gold going up a lot this year. So how have you participated in that growth in gold or silver? Your Matthias Strategy Fund, because that's one of the themes that we have. So that's what we do with our funds. And then, of course, the final sphere is the ethical investing, which is basically your Sharia funds. And as you said, giving good profit distributions, about 27% for the Mabruk Fund, and of a great return also on the global equities, global Sharia Fund. So basically, if you look at it, what we have created here, these golden eggs, they're not only offering a solution to you as an investor, so whether you're looking to preserve your capital, whether you're looking for cash management, or whether you're looking for, for medium to long-term growth, but they're also doing it in a beautiful way, okay? Because of the returns that you're delivering. And as we said, and that's why we started this conversation with just giving a backdrop of where do you operate in, the macro environment, the area that you operate in, and which factors are enabling us to derive this good tune, give them to our clients. So it's been a beautiful period. We see still more beautiful opportunities for us to continue participating in. As long as there's an opportunity out there, then our teams are ready to go and to pounce on it and to make best out of it. So thank you very much for your support, all our clients and unit holders. It's been great having you, and this beautiful nest of funds is for you.
All right. Thank you very much for that good explanation. And sometimes it feels like you get to the market and everything is looking good, you are spoiled of choice. And you don't know which fruits to buy, because everything is looking very, very good. And maybe, Priyanka, as you introduce yourself, you tell us. So with all these suite of funds that are performing very well, giving people access to different markets, how do you actually get to advise a client on which fund to choose?
Good evening, everyone. Thank you for joining us today. I'm Priyanka Shah. I'm CEO and co-founder of AlphaCap. To answer your question, John, at AlphaCap, we first start with understanding the client. We sit with the client and understand what their financial goals are, what their financial priorities are, what their risk appetite is, time horizon of their investment, liquidity needs, portfolio needs, etc., income needs. And then we sit and recommend a portfolio mix for these clients. So we'll just give you a quick example. Let's say a client has established that they have short-term goals, medium-term goals, and long-term goals. Their short-term goals could mean something like an emergency fund or a travel fund, etc. For that, a money market fund would be brilliant. As Paul in the last session quite well explained, the money market fund is really good for short-term goals. It's liquidity needed in your portfolio. And the best thing is our money market fund actually has wallets where you can put gold in different wallets and track them. And then let's say the client has medium-term goals of buying a house or a car, etc. Something like our Marcy fixed income fund would be really good for that. Our Marcy fund is a low-risk fund. It is really good for medium-term goals and such. And then in the long term, let's say the client wants wealth creation or a comfortable retirement or such. In that case, we would have what is called wealth accelerators, which are equity funds, or multi-asset strategy funds. These will diversify you and expose you across different markets, different asset classes, different geographies, different currencies. So on the wealth desk, we sit and give our clients semi-annual reviews. Every 6 months, we sit and talk to them and see what's changed, because it's very important to have your portfolio be up to date with your changing needs. Just all in all, I think it's very difficult to say that one fund would fit a client. It's usually a combination of funds, with a lot of other factors involved in them. Yeah.
And thank you for that. I remember going to a restaurant and I didn't quite understand the food. So what I did is that I waited for my neighbor to order the food, and then I told the waiter, just like that one. And I think that sometimes happens in the market where people don't understand what product fits them. So it's good to hear that the journey of investment starts with the client, and not with the funds. And I think that is quite important. Monica, we have so many people who are joining us from all over the world. You know, diaspora. Watu wa diaspora, hi. And these funds would, the funds they have invested with us, some of them are also coming in. We have people who are owners of businesses. We have people who are, looking for wealth acceleration and wealth growth. How do our funds cater for the needs of all these different demographics and different people?
Thank you very much. AlphaCap's products, as they have been explained, and the manner in which we take the investments that we invest in, they are structured in such a way that they will fit you as an investor when you're an individual, as a couple, or as a partner. Let's say these are two business partners, so you can be able to invest in AlphaCap using a joint account. We have even gone further and onboarded juniors. Now these are the children. Remember previously we have seen parents putting money in junior bank accounts. As Priyanka has said, that we are able to understand your short-term goals, your long-term goals. Surely investing for your child is not a short-term goal, because you're putting in an account here when your child is very young. And maybe this is something that you'll transition to them when they are maybe of age, let's say 18 years. So for those years that you're putting money aside for your child, in a current account, you're really missing a lot of opportunity and value, especially derived from the power of compounding. So we do have junior accounts where we are able to, a parent is able to co-invest together with the child. We also have groups, chamas, investment groups coming together. Some even circles are investing in our funds. And this is to mean that there is a space for them. Further to that, you mentioned diaspora people. Our diaspora people really give us a lot of support, and we really appreciate. We have a lot of products that suit them. A product like the Ngao fund that CIO spoke about, it's a fund that enables you to support your beneficiaries back at home. This is a fund that you put in an amount, and this fund pays your beneficiaries back here at home. You don't have to keep sending money every month or every so often to take care of your beneficiaries. At that time, you're still preserving your capital. We also do have an African fund, as our PM was explaining, that invests in Africa and for Africa. So really, you can see we are catering for various investors. Family offices, a very specialized product, targeting the big families that have over time created wealth. And right now, the main focus is how do we transition this wealth from one generation to the next. So we do have a family office offering. And in this, we are able to sit down with families, establish an investment policy statement that suits the values and the focus of each family. I mean, families are unique. They have different goals, different values, and so we're able to help them invest. Finally, we do also work closely with businesses, and this is offering them a cash management solution. In between cycles, you've received payments in bulk from, let's say, your suppliers or those who owe you your money. When you receive, before spending, in between those cycles, you can be able to put your money in our funds, for example, the money market fund, and be able to manage to earn an income here, an income there. So these are, our products are suitable for really all the investors. Yes. Yes.
Whatever the need, you are taken care of.
Yes.
Thank you very much.
John?
Yes, please.
Probably if I may support also, just what she's saying. You think about the beauty of the solutions that you have created. And, just as she has spoken about our family offices. And probably there's someone who was there was like, my family is not too big. I'm just creating wealth. I'm the person who is not creating wealth for this family. But then you find that in that family office offering, there are certain services that you can actually partake of. Things like succession and estate plan. I think we are coming, and our laws are coming of age. The Perpetual Succession Act of 2023 that was, that has made it easier for investor or for anyone who is doing estate or succession planning to actually form a trust. It's very easy for you now, instead of writing a will, which I've seen getting a lot highly contested in courts and all that, or having some structures that are a bit weak, and you've created all this wealth, but then when probably you want to pass it to your next generation, there's no better structure for you to, to pass this hard toil that you did. But then there are other services like that trust service, that you can form a trust, that your investments that are in Avocap, investments that these shares you bought through the NSC, bonds that you bought through CBK, some lands, some properties here and there, you can put them in a trust vehicle and to help you manage your estate. There's tax benefits in it, but then also to help you in succession planning. So these are services that we feel that we'd want our investors that even as they invest, even as you build this wealth, then at the back of investors' mind is that it can take care of myself, but it also can take care of the people that I love, And so how do we help them even transition that? And so that also tells you that at Avocap, when you look at it, you look at your investments, not short term, not as of today, but even in the long term. We're here to work with you the journey, not only now, but even the long term future. So that service, even if you are just building, starting your wealth building, now, you can partake of it. So great solution, great services, and for all our clients to enjoy.
I hear we are in a continuum. Priyanka mentioned junior accounts, right from when you are born to now we are talking about succession. So it means that AvoCap is taking care of you throughout the whole investment journey. And that's something incredible because most of us have learned things about money accidentally. You are either conned, you lost money in business, you didn't know about investments. And here we are talking about investments right from birth all the way to succession. I think that is quite something that is very, very good. Wilson, before we move, next year is pre-election year. And you know in Kenya, election mood starts getting heated the year before elections. We have upcoming by-elections in November and you know, preparations, formations of political parties and all these things happening. And sometimes, you know, investors may be cautious about markets and what to do. So what would you tell investor who is looking at you and they are wondering, do I put money, do I not? You know, how safe am I in as far as this investment environment is concerned?
Beautiful question. And I know it's a question that is in a lot of investors' minds when they think about how they position not only investing in the capital markets, but even starting a business. Someone is thinking, do I start a business now, or do I wait for that period? Now, from what we heard from our investment teams, the current macro environment has been very favorable for our markets, the local markets. And investors may be asking, will we get this disrupted, this good run that we have started, will it be disrupted as we head towards the election? And how cautioned are my investments, you know, as we go to these pre-election and election season? I think if you look at, and this is a research we've been doing with our teams, even as we curate our portfolios. Because as you create these portfolios, you're not just thinking about the performance in the next 1 month or in the next 1 quarter. You're thinking about this position that we are taking based on our target prices. What is the environment that they will be operating in? What are the risks to that environment? And how those risks affect the performance of each of our funds? And even as we have been modeling these risks and we have been modeling the various scenarios that are there in the market in the coming year, one thing we realized is that, one, the institutional growth in our nation, and I think that's something that really Kenyans have to be proud of. We are seeing a bit of, you know, across the region, a bit of jittery during, you know, these election periods in across different areas. But if you look at the institutional growth and the legal and constitutional growth of our nation over the past 3 decades, I think it's a milestones that Kenyans really have to be proud of. That we have grown to the point whereby we are not thinking about the election just at the event of that day, but because we know there is recourse measures in case anything happens. So that means that now that has reduced the jittery allowed, you know, the electioneering period. When you think about the institutional frameworks that are there to ensure that everyone gets a right, everyone gets a participatory right, because we are seeing in some areas that participatory right becomes very contentious. But for us, the institutional framework and the legal framework that is there enables or has created this framework. So and this, I think, are things that as Kenyans probably don't pause to appreciate the growth of our democracy as it is. Yes, there are still a few weaknesses with this fragile democracy as we move on. But I would say that framework has created, and if you look at even the performance of the NSC during the past elections, you'll find that now, and you know, from your 2012, your 2017 election, your 2022 election, that in as much as we are heading to an election period, a few months before the election, you find the market is already trading up. That there may be a bit of pause during that week, election week, maybe not much activity, but actually after that, it highly picks up. Even 2017, when there was nullification, and during that, it was a surprise. It was Black Swan event. That Black Swan event, NSE fell 10% on that particular day. But what happened the week after, and actually the weeks that followed. And NSE started its positive rally, within a few weeks had already covered that bear run and actually continued its positive. It had started in April 2017 and actually even after that, the rally continued, or the market participation continued. So I think those institutional growth and the growth about these, one gives us a bit of, gives us great comfort in the area that we operate in. And what we look at is now how with the various macro, so we look beyond this event, but look now even broader on the macro space that you're operating in, that what are the inflation trades, you know, in the moment you're operating in? What are the trades on our fiscal policies? We've seen now he started repaying paid-in bills. Great positive inflection on our fiscal policy. What is, you know, our cash reserve ratios, you know, our balance of payments and all that. So we move beyond this event, but look at within this macro space that you're operating in, what are the positive catalysts or what are the catalysts in that, and then how do we operate in that? So I think it's, so for us, I think to investors, it's, you know, giving them that comfort, that one on the institution framework and the growth that we have had, even with few, you know, I would say few structural weaknesses here and there, so they performed quite well. And then also now because looking beyond that too, the environment that you're operating in. But remember, our funds are actively traded funds. So it means that we have tools and we have measures that we take to ensure we protect our investments. As we evaluate the investments and everything, we actively monitor our positions. We actively take buy and sell positions. We actively take, you know, our first goal is absolute return. Before anything else, get to zero, even when the markets are negative. Then from there, when good times come, then you are
able to build.
You can build on that. But you're very positive. And then above all, diversification. That's why you have the USD funds, that's why you have the ZAL funds. That your portfolio is not in one basket. Your portfolio is not in, you know, it's not in one currency. It's not in one jurisdiction. It's diversified across jurisdictions. It's diversified across currencies. And so that also acts as a shock absorber in these wealth building, you know. So I think that's the beauty about AvoCap. We have not coned you off into just one basket and told you that this is, you know. We have given you a framework that you can diversify across different, you know, different needs, different spaces. And that's beauty about our suite of products. And that speaks to what our CEO, Madam Priyanka, was speaking about, portfolio building. Don't just come and invest in AvoCap. Myself, I highly discourage my clients, all our clients that we interact with. Don't just put in one that's because the best performing, put all your eggs in that. Diversify. There's beauty. And even when you look at month on month, the returns we derive from our various funds. This fund will have performed very well this period. The other fund will have performed the other month or the other quarter. So there's a beauty in that portfolio that even when these certain sector or certain portfolio is not probably doing or performing, there's another one that's doing very well for you. So there's a beauty in that diversification. So as we diversify across our investments ourselves, for you as an investor, also diversify across
the different funds.
There's beauty in that.
I think I was having a discussion with you behind the scenes, and you mentioned that one of the best months in the market was during Trump's reciprocal tariff madness sometime in April. So safe to say that for fund managers who are actively managing the portfolios, we thrive in chaos, because that's where we got opportunities to buy when some of these assets are trading on a discount. So for all our investors, as you have heard from the man himself, the man behind the numbers, there's no reason to worry, even as we get to this electioneering period. Priyanka, you have sat down with me, you have understood my goals. My goal is to retire somewhere in Bermuda, and you know, having built a very good, taken my children to school, and all these nice things that I have. Where do we start the journey? Where do you start the journey with the client?
Okay, so Once you figured out what goals you want, the investment process is very seamless. The first thing we do is onboard the client. We can onboard the client through our app, which is called ArvoCap on the App Store and Play Store, or the portal, which is accessible from our website, or alternatively, you can come to our offices and we'll open the account for you by filling up a few forms. We can open 4 types of accounts. You can open an individual account, a joint account with up to 4 joint members. You can open a corporate account and a junior account. The second step is to top up. You can top up your cash account by either M-Pesa or bank or check. And once your funds are once your accounts are topped up, you can invest. You can even top up into a Kenya shilling account and invest in a ZAR fund. And the app is there for you to see time and time again how your portfolio is faring. And automatically the statements will be sent to you monthly as well. All in all, I think our investment process is very client-friendly, it's user-friendly, it's transparent, but most importantly, it's accessibility that we are looking to achieve here.
You have something to add?
I think another beauty, and I don't know how many of our clients have explored some of the tools we have, that we make investment a bit intentional. Our calculators, how many have visited our website and done simulations below our calculators, the GAL calculator, the money market calculator, the Almasi calculator. Our wallets, so once you log into your portal, the wallets that you have to create your goals, and as you said, you want to retire in Bermuda, or you want to first take a trip to Bermuda, to Bahamas. You see the place that in future you can. So you're creating that travel wallet and all that. So we have great tools that we continue and will continue creating more tools to make it a bit intentional for clients, to make it easier that even as you navigate this investment landscape, it's then easier for you. It's easier for you to do your simulations, it's easier for you to have those tools. GAO, the GAO wallet is coming. And beautiful. You can create beneficiaries. You can invest in GAO fund. Say that I want my mom to be receiving 10,000 per month, my dad 10,000 per month. I want this one to be paid directly to school fees for my children and all that. So beautiful tools to make it investing easy and very intentional for you. So explore the various products that we have either in our tools that we have either in our website or in our app, and we'll continue making it easier for investors as we walk this journey.
And thank you for bringing up that issue of the website, because the website is almost like a library. We have documents, we have fact sheets, we have even the historical performance of each fund month by month, so someone can be able to monitor that. So wherever you are, please go to avocap.com, look at that website, and you'll be able to see all the resources that are there in that website. We are still taking your questions. Please keep sending them. I keep seeing them there, and some of the questions that I'm asking our panelists tonight are derived from the feedback or the questions that you are asking. So please keep sending them so that we are able to respond to them. Madam CEO, I know as a fund manager, definitely there is something for us. There is something in it for us as a company. How do our fees, how do AvoCap's fund fees on the funds look like? Yeah.
All right. As I said earlier, that 1 year was quite intense. And a number of things came up. Clients, and we understand, no one likes paying fees, especially when it's deducting money that you have earned. So we curated our fees very strategically. We have broken our fees into 3 categories. We do have an initial fee for when you join. There is an initial fee of 0.5% in most of our funds apart from money market fund. This is to cater for the platforms that the CEO was talking about and all other matters. Then we do have management fees. Our management fees is what keeps the company going. So we've again put them very minimal. Our special funds have management fees of 2%, and the other regular funds like the Almasi, the bond funds, we say these funds, we can say they are easier to manage. So really no need of overcharging the clients. There we charge 1%. We do have another fee that we call performance fee. This is a fee that ensures that all parties are covered. And this is to mean you as the investor, us as a firm, and generally even the people managing these funds, and these are the staff and the huge background team that we have that checks on these investments. So performance fee is charged upon performance. This is to mean if we don't perform, we will not charge you. But if we perform, then we will all partake in the joys of this delivery. So some of the funds, the fixed income funds, do have a hurdle rate. For example, Almasi has a hurdle rate of the 5-year government bond plus 200 basis points. This is to mean that even as you can hear, our hurdle rate is still quite high. So that's for the Almasi. Anything above that rate, that's the 5-year government bond, is at the end of the year, plus 2% or 200 basis points. Anything above that, you're charged 20%. So you still keep the lion's share. You'll take 80%. For the Eurofix, it has a hurdle rate of 10%. I mean, this is a dollar fund. We are saying anything above 10%. So already the minimum is so high. Anything above 10% is what we will charge 20%. Again, you keep the lion's share. For the other funds, these are the equity funds and the multi-asset strategy funds. These ones, they charge a one-off 20%. So this is to encourage our teams to ensure they're giving the best returns. This is to ensure that we are all on deck to ensure that the better performance we deliver for you, we all partake. So it's good you asked that question. I know a lot of clients have been asking about this. Why are you taking my money? You know, now that you have already made it for them, it's clients. So we are just explaining why we are taking your money. Is because we want to make you more money and to ensure that you're always making above the bar kind of returns. Yes.
Thank you, Monica. For those who don't know, 200 basis points is 2%. I just learned it the other day. That means that it is in the best interest of the client that we perform, because we have, and also it is in the best interest of the company to perform, because part of the fees are tied to performance. And I think that is something good for the client to understand. We have quite a number of questions that are coming from you viewers, and as we said that this is our session, I have a question here and I would want to open it to any of my panelists. Why is withdrawing, if investing in a corporation, limited only to banking system, which is low compared to M-Pesa, which is possible when you have a personal account? Why is it that, you know, when you are withdrawing, if you have a corporate account, it is limited. Withdrawals are only limited to bank as opposed to M-Pesa.
Maybe I can take that one.
It's okay.
It's a simpler one. Let our CIO take the
numbers.
Tougher ones.
Yes.
Yeah. This narrows down to KYC. Remember, there is no company that can open an M-Pesa account. So when you are requesting us to pay company into an M-Pesa which is owned by an individual, there is a compliance matrix that checks in. So not unless it is addressed in a very sensitive way, and this is just to ensure that, for example, let's say it's a company that has 2 signatories and they have chosen one person to be receiving. You can already see there is a loophole there for challenges. But when a company is owned by one director and they're the sole director or the sole shareholder and they want to be paid by M-Pesa, that is a compliance that can be arranged. So really it's, just to narrow it down, it's a KYC matter. Okay. Yes.
Thank you very much. Another question has come. Some of us don't understand what is a hurdle rate, and it is true. So I am throwing it again back to our panelists. What is the hurdle rate?
Minimum threshold.
Okay.
Simply to put it, a hurdle rate is a minimum threshold. That this is a minimum bar, minimum threshold that you have set. That if we don't achieve that, then surely we have not done our work well. So that everything that you have made goes to the client. But if we go beyond this threshold, then means our teams put a lot of effort in it. All our work can be seen. So that means that anything above the threshold, now that's where the performance fee kicks in. So to put it simply, handle it, it's minimum threshold.
Thank you, and I think that is quite well understood. Keep sending your questions. There's another question here. Someone is asking, you have so many products, you have so many funds that started at the same time. How do you efficiently manage these portfolios? How do you ensure that, you are local, you are in Africa, and you're also in the global markets, and all of them are well managed to deliver the results that you do? How do you do that?
It boils down to having a great team. We have analysts who are specific, for African counters, specific for local counters, specific for global counters. We have people to react when Trump talks, for example. So it boils down to a really great team who work tirelessly to make sure that we perform the way we do.
And also, John, to add on what she has said, remember we said the investors' needs cannot be in one box. And you can tell this once you have sat with a client and they've told you they have this long-term, short-term, and medium-term goal, and you tell them, for now we are going only to sort you out on this short-term goal, we will come into the long-term goal later. So really, it was a matter of necessity and practicability. We had to bring them all at the same time. Of course, some took time to pick. Investors also took time to understand them. But once they've understood, we've seen our different funds take off different months. I think we were talking with the CIO today, and our global equity fund this month has nailed it. 2 months ago, it was Africa Equity Fund. Multi-asset had its moment to shine. Almasi has been taking it almost every month, and the first month when we started. So what I'm saying is that the tools are there because they are necessary, and they have a role to play in every investor's portfolio. Yes.
And thank you very much. I think today I sat next to our CIO when he was explaining some of the funds to our client, and I had a client make a comment and say that, we are quite a young team, vibrant, knowledgeable, experienced, and we are able to bring the global markets home and give everyone an experience to own global assets from the palm of our hand. And I think that is very encouraging to hear. Priyanka, we have the Teens Masterclass program that runs every holiday. We have one that is coming the first week of December. What is the thought behind this Teens Masterclass? I know there are very many parents who are watching us. What is the thought behind this?
I think the Teens Masterclass came about thinking about children and what they're learning about. It's very important to figure out what money is, how to save, how to invest, what it means from a young age, learning how to budget. And that's basically how the idea was born. We've had 2 teen masterclasses already, and they've been going brilliantly. We then received a lot of other comments where people were like, okay, we want to join, but we're not teenagers. So we're looking to expand it across all ages. But I think it's education, client education, on learning these basic things that no matter what you become, a doctor, lawyer, etc., you need somewhere to put your money. So yeah, it's a non-negotiable in our books.
All right, thank you very much. There's another question. From your notable portfolio mix, the highest returns realized from the local market have been driven by valuation gains from local counters. Considering the significant volatility in the stock market, is there a strategy in place to mitigate such risks while still delivering returns comparable to the current levels in the future? And maybe I think that's a question.
Okay. probably my investment team should not hear this, but I'll give an example, a very practical example. In June this year, based on an investment research paper, we bought 1 million shares of Safaricom. It was trading at allowed 25, 24 point something. Our average was allowed, cost and everything allowed 25. Come September, the price had rallied all the way to around 31 for a day, but traded a bit at volumes allowed 30. So we exited our position allowed 30.2. So our 1 million shares. So it means we have made a decent 5 million, from that trade. Then immediately we bought around 1.5 million shares of Coop Bank. They were trading at allowed. We started accumulating around 18.9 all the way to allowed 19.2. That was in mid September. Coop Bank rallied to all the way to 21, allowed 21.6 earlier this month. We exited our positions, or we exited part of our position. So I'm just giving one trade. So there's many trades. In fact, that now, so I'm giving. So when you're buying the 1 million shares, there were other lots that we bought, but I'm just giving this one, and see how we do compounding for the investor. Then 2 weeks ago, Safaricom, Safaricom retraced from the 30 areas back to about 26. We bought another decent 4.8 million lot of shares of Safaricom at about 26 shillings. Now the price has rallied all the way to 29.5. And I can go on and on. So you can see from this one trade that we had initiated, the compounding and the active. Now for an investor who had just bought the Safaricom shares, they probably saw them go to 30, then come back to 26. Now they're back to 29 point, and they're saying, okay, but you see, for us, we made money in that. For those that bought their Coop Bank shares, rallied to 20.6, came back to allowed 20, we bought back again. So as we are active in the market to do compounding, and as we are doing this, we have long-term holdings within the same stocks that we have been holding for for quite a while, that we bought at quite low levels because they are strategic long-term plays. So our diversification, that even when we invest in one counter itself, we're not just going all in blindly in one, but each trade has a thesis behind it. Is it a long-term play? Is it a trading play? How do we incorporate all these? So it means that for us, even when there's volatility in the market, that's why we're driving. Because there are opportunities for us within our trading component of our portfolio. So I think for us, even, yes, we don't expect markets to be linear, that they're always going up. This will be a very boring thing. But through this volatility, our teams, they're agile enough to spot them, check favorable trades, and we continue compounding our growth for our clients.
Wow, thank you. In 1 minute, our shilling has been stable around 128, 129, thereabout. And there's a client who is asking, even the IMF is saying our shilling is too stable, and we have dollar funds. What is the impact this has on our market, and how is this impact, does it impact our investments? Also, this China-US trade wars, how is it affecting our portfolios considering the global positions that we have taken?
Currency stability. I don't see how currency stability is a bad thing. I think it's a very great thing. I've come from a period of rapid volatility, a lot of speculation. But then on the other side, from a macro perspective, if you look at, the macro analyst spoke about the great macros that are supporting these shilling at that level, from the growth in export remittances growth to favorable current accounts balances, and now which also leads to growth in our cash reserves. So the macros have been there to actually support the shilling at the level it is. And from a strategic point of view,
it's a good thing.
It's a good thing for the revenues in the nation. It's a good thing for exports. So I think it's been a great period on the macro level, both physically, the fiscal policies and the monetary policies. And yep. So now, jumping to the second question on China, Trump-China, or China-US tariff. Today there was, early in the morning, in South Korea, there was a shaking of hands. There's a handshake between President Trump and President Xi Jinping, and negotiations about some known issues between the trade of the two nations, from rare earth metals and access to the rare earth metals, and also now things like shipping costs and all that. And we are seeing, and the markets have been positioning positively to the developments in these. Remember, we live in a competitive globe, and every nation is trying to do the best they can for their own industries. So most of these has been, each nation trying to do the best or what they believe is best for their own nations. So, and to us, what does it mean? The biggest fear was inflation and what could lead to inflation. We have not seen growth in inflation rates. Yesterday, the Fed chair was speaking yesterday, and if you listen to him, you know that seeing that transitory inflation rates that was feared, in the market, we've not seen the same appearing in the CPIs and all that. So the fears that were there initially, I think once the data started coming, and the investors could see the data, and they could see the impact and the effect. And that's why I think we have seen S&P rally quite strongly from the April lows, because as the data every month comes out, it just shows that those fears are a bit overblown. Yeah.
All right. I think that is answers it, and our viewers, we're almost coming to the tail end of our webinar tonight. But maybe before we do that, Monica, we are getting into a busy festivity season before we reset and start doing New Year resolutions for January and the whole of 2026. And I know most of us leave our resolutions halfway. You start very strong. Someone was telling me that when someone is broke, they make the best resolutions. But when money comes in, something changes and they start tunaanza upya. And what do you tell that investor who is, looking at 2026, who probably this year they think they missed out on opportunities? They hear gold has done well, they missed out. They hear AI has done well, they missed out. Now there's now what is happening right now and more opportunities next year. What would you speak to that client, and what would you tell them?
All right, yes. I'm going to equip you with 3 key traits you need to work on so that you can be able to cross to the next level of creation of wealth. The first one is intentionality. You've got to pause and ask yourself, why do you want to invest? What does it mean to you? What are your goals? What are your objectives? That's the intention. Why would you want to invest? The second one is discipline. How will you be, how do you ensure that you are committed to that goal? And the third one is consistency. You do not become wealthy by investing once. It is small bits, every so often, consistently, and you will be able to arrive where you're going. So take those 3 things home. Let those be your resolutions for 2026 from now going forward, that you're going to be intentional, you're going to be disciplined, and you're going to be consistent. Of course, there are many other things. You're going to research, you're going to read, you're going to, all those. But at least with those 3, you will find everything around that wealth creation journey has been factored in. Yeah.
Thank you very much. And I think as we come to the tail end of our webinar tonight, I want to give all of us to give a parting shot, starting from our Chief of Operations, Priyanka, going all the way to our Chief of CEO.
I would like to thank all of you for spending the evening with us. I hope there was some value added. I hope you learned a bit about the markets, a bit about our funds, about how to create portfolios. and how to retire in Bermuda. We believe investing is a journey, as Monica said. It's not a one-time investment. And so whether you're starting out now or you're already building your portfolio, we're here to walk the journey with you. ArvoCap is your platform. It's designed to help you access opportunities and grow. We're really looking forward to what's ahead of us, and we're really looking forward to growing with you. So thank you for being part of the family, and we're hoping to chat a lot more.
Thank you very much, Priyanka. Yes, Wilson?
Why do we do this? One, to help you as an investor understand some of the thought process behind the trades we make, behind the investments we make, and give you comfort in your investments, in your investment journey. Two, it's different. It's 10 funds. They seem a lot. Where do I start? What is my next investment? Just to help you in your portfolio building, to help you understand at least a bit of the thought process or the minds behind each of the funds. And from there, based on your goals, based on your plans, then you can actually position yourself through these funds to make the best out of the markets. So it's been great having you. We'll continue doing this. It's been a great year. We still see good opportunities for us, and as I said, and as I've just given an example, if there's an opportunity, for us, we'll always go for it. And our team will always continue looking for the best opportunities for you as investors, and to help us optimize your portfolios and be partners with you in your wealth growing journey or in achieving your financial goals. So thank you very much. It's always a pleasure.
Thank you. Thank you. Team leader?
All right. Thank you very much for sticking around with us this far. My parting shot today is our tagline, redefining wealth. We are here, game changing. Are you going to be part of the player, or you're going to sit back and watch? Make sure you open an account with ArvoCap. It's very simple. Download our app, ArvoCap, open an account, and start your investment journey. And thank us later, because you'll have redefined your wealth. Thank you.
All right, and with that, we are coming to the end of our session. I want you to send emojis and you send flowers to our team, the panel, the first panel discussion, the second panel. Please send them flowers, send them the claps, and we really, really appreciate you because of the session that you have given us a lot of knowledge. I want to just reiterate a few things that have been said here, that wealth creation is very intentional. It doesn't just come, it doesn't just happen. And of course, like muscles that develop with use, you start those journeys and you keep building up until you get to where you are going, in this case, Bermuda for myself. We have our contacts. If you need any assistance, our contact is 0701 300 200 and 0701 300 700. You can also find us on X. You can find us on Instagram, TikTok, LinkedIn, YouTube, and our website. We are all there so that we can be able to respond to you. Remember what I told you. We are hosting the Men's Wellness Summit. This is an annual event that you cannot afford to miss. If you miss this time round, utaambia nini watu? Please make sure that you go to mookh.com and search for Men's Wellness and get the ticket from there. You can buy an individual ticket at 7,500. Early bird is ending tomorrow night. You can buy a group of 3. You can buy a group of 5. You can buy a group of 10. Make sure that you come. For the ladies in the house, starting from our own viewers here, make sure that you buy a ticket for the man in your life. Your boss, your friend, your husband, your brother, your enemy. Anyone who you would like to come and experience something nice, make sure that you do that. There will be a lot of good things, a lot of learnings. We will have a lot of nyama choma, and for those of us who do not eat meat, there will be a lot of other good things that are stored up for us. So please make sure that you don't miss out on this opportunity to meet other men, unwind, and be able to learn. And with that, ladies and gentlemen, we are bringing this session to a wrap. It's been a pleasure hosting you tonight. This recording will be uploaded on our YouTube channel so that you can be able to review it and be able to take the lessons pole pole. Thank you so much for being with us all the way from 7 p.m. in Kenya. It's now 7 minutes to 9. And with that, we come to an end. Thank you and see you next.